Welcome everyone to LeapMeet 103, April 2023 TradeLog review and technical analysis. We'll try to make it as short as possible. So let's get started. All right, this is not what I was looking for anyway. So this is the April 2023 TradeLog. As I always tell you guys how important it is to keep record of every single trade that you take, because if you don't take notes and if you don't remind yourself what mistakes you have made throughout the month, there is no way for you to correct those mistakes, because you're not going to remember anything from like week 1 of April right now, because it's impossible to remember with the amount of trades that we take. We're a day trader, so the amount of trade we take every day is quite high. So that's why you need to take notes every day. A lot of people don't do it, and then they keep repeating same mistakes over and over and over again. So every time I do TradeLog review, I stress and tell you guys how important it is to do so. I used to take, at the end of the day, at 1 p.m. Pacific time, when market closes, it'd take about 10 minutes to just write down all your trades that you did for that day, why you entered, why you exited, what went wrong, what was your thought, what was the market condition. I used to do that every single day. I'm like, okay, market condition was choppy today, so I ended up taking 1 trade or 2 trades overall. Market was not very friendly today, so I didn't take any trade. Market was up in the morning, and then I decided to enter in calls, and then all of a sudden it tanked out of nowhere and I didn't get a chance to exit and it never recovered. Whatever it is, write it down so that when you go back at the end of the week, at the end of the month, at the end of the quarter, you know what you did and what went wrong for losing trades. And you will also know what you're doing right. So what I used to do is I would write down why I entered in a trade. Oh, it break above this long-term resistance level. Oh, it break above VWAP. It broke below VWAP. Oh, market was very red today, so I decided to enter on the downside right off the bat. Whatever it may be, why you entered, you need to know. And it cannot be, oh, admin Y entered, that's why I entered, because then you are reliant on me, and that's not the goal here. Our goal here at TRADEORE is to make you your own trader. So maybe 6 months from now, maybe a year from now, maybe 2 months from now, you never know, you won't need us to make consistent money. That's our goal. And that's what we are trying to teach you guys, so that after a certain period of time, you won't need us. You can still stay with us and you can still use us as a GPS. That's how I tell it. And it's always good to trade with a group and things like that. But the goal is not for you to enter when I enter. The goal is for you to understand why I entered. And then you start to understand the patterns. You start to understand what works for you with your trading style. So out of 5, 10, 15 trades, if 8 or 9 of those trades are like, okay, I entered when it broke above VWAP, then you know it's working for you, because 8 trades worked, 2 trades didn't work. So now, instead of so for next week or so, or for the next month or so, focus on that one thing. Every time it break above VWAP, you enter. Every time it break below VWAP, you enter. Things like that. Do more of what works for you and less of what doesn't. So if you continue to do that, you will end up with 1 or 2 setups that works fantastically with very, very high probability of success. And after that point, that's all you gotta do. But if your reasoning is to enter because this guy entered or that guy entered, or if your reasoning is to, I don't know, I entered, or oh, trade worked because I followed admin Y or admin H's trade. That's not gonna last. That's not long term. That's not going to be sustainable, right? So focus on improving, and it's gonna take time. It's not gonna happen overnight, but anything worthwhile is going to take time. So you need to be patient, and you need to continue doing this over and over and over and over and over again, and then it will just click. You all know I've shared it many, many times, my own story of how I blew up 3 or 4 accounts before I found my way and why I do this. But I can only tell you to do it. I'm not gonna come to your house and check your homework um, because we're all adults here. So I can show you the way, but you will have to walk the path. And a lot of people don't because, oh, it's so much, takes so much time. I just want to follow your trade and make money. That's not how it works. That's not how it's going to work. That's not how you're going to make money. That's not how you're going to build your future or achieve anything worthwhile, because you're following someone else's footstep. Although it's good when you're new and you're finding your way, but at the end of the day, you will have to do it on your own. So that's why TradeLog is so important, and that's why taking that 10 to 15 minutes out at the end of the day, at the end of the trading day, at the end of the day when you have time before you go to sleep, whenever, but do it. I promise you, it will change your perspective on how you trade and why you trade, because you will start thinking critically. Like, okay, every time you're like decide trying to enter the trade, it will come to your mind like, what am I gonna write down for as a reason why I entered in this trade? And like I said, it better not be, oh, because admin Y entered, or oh, because admin H entered, because that cannot be the reason, right? So you will start thinking in a way where if you don't find a reason to write down, you will not enter in that trade, because you're thinking critically. You're not simpleton and like, oh, he entered, I'm gonna enter, So and you will learn like why we take certain trades, why I take certain trades, why I do it at a certain level. And if you don't understand, ask me in the room. Like I'll be like, all right. A lot of people, actually not a lot, but quite a few people sometimes ask me like, hey, that Microsoft trade, why did you enter at that level? It was like the perfect entry, bottom of the level. And then I explain it, and then you write it down. And that's how, when you see something similar the next day or the next month, you know what to do. And you are not behind me, but you're probably like, we're taking trade at the same time, because as you know, like I try to put in the commentary, I try to always say like, hey, I'm looking at this level. If it breaks below this, I'm probably going to enter in puts. If it breaks above this level, I'm probably going to enter in calls. I'm writing those so you're prepared to take it. But you won't be able to take it alongside me if you're not prepared for it and you don't know what to look for. By taking notes, you already know why why I mentioned this. He's watching this level for support and a bounce, because this is the level that has provided support before. So now you're ready. And when I put it, you're already there and you're not chasing. Because a lot of time what people has told me is that I put the alert and then they have to go find that stock, find that expiration date, find that strike price, enter the trade, and by that time it's already up 5-10% from the entry that I took. And I'm like, yeah, that's always going to happen because you're following someone. So the someone that you're following will always be one step ahead of you. In this case, it's me. I don't want you to, and that is why I don't want you to follow me. I want you to do it alongside me. And that's why I put all this notes and commentary that this is what I'm looking at, this is what I'm looking at, this is what I'm looking at, so that you start looking at it too. And then we can do it together. Or the lag between me posting alert and you taking the trade is very minimal. so that you can get super close price, entry price, where I entered or even below it. But these small things you will start noticing once you start taking notes and start thinking critically. So that's why TradeLog is so important. And that's why I keep on saying it, like, do it, please do it. Anyway, let's go over April real quick. Let's first go over April here. And as you can see, April started here, right here. First 2 days, pretty much sideways, pulled back, and then started going up. So the 4 days of April, pretty much sideways, and then it was going up. It held this trend line that I explained in our technical analysis webinar throughout the month of April. It was continuously going up, very nice. And then it ran into resistance at 4170 about like 18th of April. And then it started trading downways, pretty much held support for a little while. And then big red day all the way to 26. And then another 2 big green days. And we're back to highs of 41.85 again by the beginning of May. So overall, if you look at from here to here, the range that SPX traded in was about 40.50 to 41.80. It's about 130 points. But mostly, as you can see, like sideways. This month of March, like middle of the March, it started moving up, and this was like very sideways moves. I also see the range for every day and compare it to March. So March started here. Look at how big the range was, 39.40 almost to 40.80, like 140 points jump in 3 days, and then another crazy drop in another next 5 days, and then started going up, and by the end of the time it was like pretty much break even. So the range was big. Month of April was not so much. And also once it started dropping, as you can see, like red, once it was going up, green started going up this range, it was like more green than red. Here, as you can see, it was like green, red, green, red. Like there was no clear direction, is what I'm trying to point out. Green, red. Like it's all over the place, very choppy. So what do we do? So when we started trading, the whole idea, like the first week, I was very optimistic because April has historically been very good month for stock market, and because it provides very good returns. So I was optimistic. We took quite a few trades on first day. One of them was SPX, which didn't work, and the first week Netflix didn't work. Both went to zero, and this is the big problem, especially when market is volatile. You don't know where to put stop loss, right? Because a lot of time, as we have seen, it goes to like 5 cents, 10 cents, and then the next day it goes to $1. So when it comes to options, finding that stop losses is very, very hard. So what do? There are 2 things you can do. You can lower your position size. Since if you're playing like $500, $600, or $700 position in this case, what you can do is you can lower your position size to 350, like cut it down in half. So instead of losing 700, instead of losing 100% of your investment, you're already, by cutting the size down, you're already cutting it down to like half of it. And that's what we did here. So because this was like this same day or the next day expiration date, I only took one. I didn't take that many, like big of a position, because I didn't want to risk as much. And another thing that you can do is, if you're trading weeklies in the name, not the SPX, but the weeklies in the names that we usually trade, change your position size. So for example, if I'm taking like this 90 cents position, right? So this is on Tuesday. I took like 7, it's almost like $700 position. But if you go to like Friday, is 65 and I only took 4. Why is that? It's because I wanted to limit how much risk I take. And the same thing on Thursday, 44 cents, I opened like about 10, so like about $400 position. So I'm not even for the $700 maximum position size, depending on how the market is, what day of the week it is, I change my position size quite a bit. So I don't always, like, maybe Monday or Tuesday I'll go with like 100%, but after that I cut it down because I want to, and I put this usually in the with the alert too, like smaller position size or taking it small or it's a lotto or things like that. It's me giving you hints that I'm not going in with full position size because no matter how much I trust this trade, remember, market, the way your mentality should be is that everybody out there is out to get your money. So you have to be very vigilant. So I'm like, I don't want to take too much risk. I don't want to open $700 position on Friday or Thursday. It just doesn't make sense because market is almost always working against you. So you have to protect yourself because no one else is going to, right? So that's why I cut it down to like position size to like half or even smaller in some cases, because I just don't want to take that risk, right? So, but, or other thing that you can do is like, as you can see here, I did take like $1.50 and this is like almost $600 position. Why is that? It's because even though it's Friday, the expiration day is for the next day. So I'm already putting guards in place where I'm protecting myself, and that's how it should be. So stop losses is one of the mechanism to minimize your losses, whereas there are other ways you can do it by cutting your position size and by 50%. You're already putting stop loss at 50%. So even if this position goes against me, I'm only going to lose 50% of my original investment, like original planned investment, because I cut the position size in half. So things like that you can always do. Comes week 2, almost everything pretty much worked out for us. There were days like where I didn't feel that confident, so we only took like 1 trade. Again, Tuesday here, we only took 2 trades. So a lot of it depends on what I'm seeing in the market. And as you can see, a lot of time, like the exit was like same place. I'm like, I'm not feeling, even though it was Monday, I was like, all right, you know what? I'm not feeling it. It's not doing what I'm supposed to be doing. So I'm out. In my case, because I open like half, my position size is usually multiple contracts, I can sell half and minimize my losses. If you're trading 1 call or 2 calls, get out. You'll always find another opportunity. As you can see, there are so many trades that we take. If you didn't trade today, 1 or 2 days, it's not going to make or break your account in any way. But if you force trades, if I were to force trades here and this entire position goes to 0, then I'm going to be in trouble because now I lost here. I didn't make any money, and that's fine. But if this position went to 0, I would have lost $600. Given that it's still less than $700 position, I would have lost $600, and that would have wiped out my entire previous week's gain in just 1 trade. So I was like, there is no way I'm going to let that happen. So I was like, all right, you know what? I'm going to cut it. I don't feel it. I'll revisit it next day, something like that. So I sold half of it, and then the last entry did go up. We did end up getting this 29% profit. But what I want you to note is that this column should be your goal. So this profit that we are showing you guys at the end is not based on highest exit. This profit here is based on the first entry or first exit or second exit. So don't focus on this one. Don't things like, oh, 100%, I should have waited in it. No, you can make this amount by being conservative and getting out as soon as possible. So look at this exit This is the first or second exit, right? 27, 20, 15%, 19%, 16%, 18, 0, 26, 14. There is very, very rarely you will see this number going to 30. Very rare. And that is if like it moves super fast. So like there are like 4 or 5 instances where it went crazy, and like for example Microsoft, it opened, this was the earnings lotto, and it went crazy the next day in the morning, and boom, opened at 5:15 and ended up being at 300%. But this is not planned. This was not planned. This was like I got lucky. And that's why I tell everybody every single time that you cannot plan for 100% trade. You cannot even plan for 50% trade or 100% or 80% or whatever it is. You cannot plan for those trades because it's never going to happen. If you enter in a trade with a mindset that I'm going to sell this at 50%, more often than not, you will end up losing everything. So don't plan for 50 or 70% or 80%, because I'm telling you, it's not there. So how do you get to this 300% or 100% profits? Do what you're supposed to be doing again and again and again. And one day when you wake up the next day, you're going to get lucky and you're going to get that 100%. All 100% trades are luck-based. Nobody in their right mind can plan for it. And if anybody tells you otherwise, they are lying, and they just want you to think big of them. For me, I don't have anything to prove to you guys or anybody else or even myself, because I've been doing this for a long time. I have done what I'm supposed to be doing. I have achieved what I wanted to achieve. So I'm in a place where I don't need to lie. I don't need to paint a rosy picture for you where I'm talking about, oh, this is what's going to happen, or I was right. I planned for this 100% trade. You should have done this, or you should have done that. And then you could have go to 100% trades too. Never happens. You plan for this 16% or 8%. My goal when I enter in a trade is to make anywhere between 20 to 30%. If market is how market is right now, I'm happy taking that 15% or 16%. I'm out. Because think about it. When you're trading stocks, when do you trade for more than 20%? If you can make stock trading, if you make 10 to 15%, you're going to be happy, because that's a very nice return. But when it comes to options, all of a sudden everybody wants 100% or 50% or 60%. It doesn't happen. You plan for 20%, and then you end up getting lucky, and then you get 100%. So 100% trades are pure luck. Nobody can plan for it. Plan for this column. Plan for this 20%, plan for this 20%, plan for this 20%. See how my exits are consistently at 20%? Because I'm like, all right, if I get 20%, I am happy. I am happy. So that's what you plan for, and then you get lucky. And sometimes it doesn't get there. It's giving me signals. I'm looking at the charts, and it's giving me a signal that, okay, it's running into resistance, and I'm already up for 16%. I'm not going to wait for another 4%. I'm not going to risk it. I'm out. I'm taking my profit and I'm out. At least half a position, I'm taking it off the table, because I am very, very greedy in that sense. Like, I don't want to give my profit to anybody else. Even if it's 15%, I'm taking it. So this is the column you want to focus on, and see how consistently it's between 20 to 30%. And very rarely it goes to like 112. Even that 112 exit, look where my first exit is, 0%. That's where I sold. I'm like, fuck it. I don't want to risk it. It's Friday. I don't want it. So half a position, I'm out, break even. I'm like, okay, now I can rest in peace and not after dying. I'm like rest and be peaceful that even if this position goes to 0, I'm not losing my entire investment. I'm only losing half of it, and that I can live with. So that was the whole idea behind getting out here. And that's how your mentality should be here. Look at that, 22%. 9%, 10%. It's almost always. And this is the consistency I want you guys to follow as well. And then you will start seeing yourself getting lucky because you're consistent, not because you are the master. I am not a god that foresee the future and be like, okay, this trade is going to 100%, so I'm just going to hold on to it. It's nerve-wracking. It's so stressful. So I'm like, once I have my profit, once I'm out half a position, I'm peaceful. After that, I'm like, all right, now I can be patient. Now I can wait for it to go to 30, 40, 50, 60% for my second exit, because I already have my half of my investment out. I already have some of my profit out. So now I can be peaceful, like I can wait. Then you get to 60% and 80% and 100%. But if you're trading with one or two stocks, you just start a contract and you're just starting out, focus on this column, focus on consistency. That's how you're going to win. That's how you're going to be successful. Anyway, so week 2, lots of green. We took some good trades. Again, AIM was 20 to 20%. We were consistently getting out. TAC was doing good, and this was right here. This one, when it was going up, this is the second week right here. So it was worked fantastically for us. Like only one green trade, one red trade on Friday, which was a lotto, so it failed. Comes week 3, this was the earnings week, as you guys know, when all big tech started reporting earnings. And look how dramatically our number of positions lowered. 2 trades, 3 trades, 3 trades, 3 trades. One of the 19, I didn't even make any trade. I wasn't just feeling the market, and lots of uncertainty. Nobody knew what I was going to do. People like to make prediction. I don't like to predict. I'm good at reacting to things and making reaction plans rather than predicting, because I'm not a god. I don't have time traveling machines or anything like that. So I don't know what's going to happen. So I would rather just sit on the sideline and wait. I did take a lot of calls here and there. But overall, it was a decent week because we minimized our risk, because we minimized the number of positions we take. Again, the goal was still like 50, but volatility was there. So we were able to take like 25, 30, 25%. But as you can see, like a lot of time I was like, nope, I'm getting out 2%, 0%, 16%, even 15%. I'm like, I'm out. This NVIDIA, if I were to hold on to it, this would have gone to like 240%. Could have had and this happened in one day, but I didn't plan for it. My plan was 20%, and even then he was struggling. So I was like, all right, you want 50%? I'm taking it. My profit could have been so much bigger. And that's what I'm trying to tell you, like that this whole TradeLog is not to show you guys how good we are, but it's to show you guys what's possible if you follow consistency. Because if we are to show you how good we are, just like by manipulating numbers, all I had to do was just change this to like 680, and it would have swallowed this up to like this one tiny change and 60 to 100 from 45. But that's not our goal. Our goal is to show you the reality, or very close to it at least. So that's why we do this. That's why this number doesn't mean shit, because you're not able to take every single trade we take anyway. But consistency is what we're trying to point it out here, how to trade when market is choppy and things like that. And this is what we're trying to point out, like that earnings week, we didn't take that many position. We still, Friday, we tried to take a couple of them, worked out really nicely. And then week 4, again, was the last week, right? Right here. So we did take advantage of move on the downside and the move on the upside. As you can see, we were playing a lot of puts in the first couple of days. Few calls worked out as well, and then all calls here. And those worked out very nicely as well. So overall, good week, overall good month as well, 90% success rate. Now, is this us trying to paint the rosy pictures, maybe a little bit, but these are not like imaginary trades. These are like documented trades that we took. But in reality, if you are to just follow our trade, then you won't be able to achieve this because, again, like you're one step behind, right? So don't worry about it. Make up your own plan. Trade you, if you take half of this trade, that's fine too. You, instead of able almost getting 5,000, you will probably walk away with 2,000. But follow on consistency. Don't worry about the number of trades you take. Don't worry about the number of money, dollar amount that you make per trade. Even if it's like all these trades are like $25, at the end of the day, if you have like 50 winning trades, you're still gonna make up like good amount of money. Like you're still gonna walk away with over $1,000, right? Even if it's you're just making $25 profit, right? When instead of taking 65, you're taking 50 trades, you're still gonna walk away with $1,200. That's the power of consistency, but most people don't get it. Most people want instant gratification and big numbers, and that makes them feel good and want to brag and all that. I'm like, I'm very simple. I don't care. I'm not going to tell you like fancy words and things like that, or show you big numbers and be like, all right, you can get to 150% too, blah, 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 blah. All you got to do is just follow it. No, that's not how it works. Anyway, that was the April. Overall, a good month. A little choppy, but we navigated it very nicely, 90% success rate. So can't complain, right? All right, go back to, let's switch gears and go to technical analysis. If you guys have any questions, feel free to ask. We don't have that much time right now, so I'm going to take a little pause here. If you guys have any questions, unmute yourself and ask it, or put it in the chat, and I will get to it. All right, then let's move forward. And as you can see, if I zoom out, then you know what I meant when I said things are moving sideways. Look at where April started and look at where it ended, right? Like literally sideways, super choppy, no clear direction. And it has been like this. People are crying, oh, there's a big pullback coming. There's this coming, there's that coming, recession is coming. With all that is going on, with banking crisis, everything, market is not letting up. Job numbers are great. Inflation is not super out of control. It's not under control either. It's like where it has been. Interest rate, even though interest rates are going up, everything is stable. Economy is behaving strongly. Consumers are there. People are spending money still. The businesses are doing well, right? But still, everything is looking good right now. Now, it may not be good 2 weeks from now, because again, we're not God. We don't know what's going on, and we're not sharks either. In this big ocean that is stock market, we are small fish. And the only way we are going to survive is taking a day at a time. Because predators, sharks, whales, all these big names like hedge funds and big institutions and banks and politicians, they know what's coming. They know which bills are going through. They know their bottom line numbers or how their business is going to be. How do you think, for example, SVB? I was reading about it the other day. SVB banks, their upper management CEO sold $3 million worth of stocks 2 weeks before the bank collapsed. How did he know? He doesn't have bank. He doesn't have anything like a time traveling machines or anything. But he's CEO. He knows what's in the pipeline, what's coming. Politician knows what's coming. Big banks know what's coming because they have they have connection. And insider trading, although it's illegal, people still pass information. Same thing with hedge funds. When you're managing $1 billion, you have eyes and ears everywhere. We are not them. So the way we survive is taking one day at a time. You cannot plan for what's going to happen 2 weeks from now, 3 weeks from now, a month from now. You cannot predict that, oh, market is going to tank this year because of this or that, or you don't know nothing. Literally nothing. And if you tell me otherwise, then you're not only bullshitting me, but you're bullshitting yourself and everybody that listens to you. So I'm just giving you as it is. So we are small fishes, and what we do is take it day at a time, a week at a time. So by looking at this chart, what we are seeing is that market is not letting up. It went to 40-50 twice, right? In last month, and both time it held and bounced back. Same thing happened back on 26th April, again happened in 4th of May. Now market is back to the resistance level at 41.50 where it failed before. So I'm just gonna move this a little bit up. That's more in line. So right here, this level 41.50, right? That's where it failed twice now. So now going into next week, what I'm looking is this level right here, 41.70. If it manages to get over this 41.70 level, then the next is right here at 41.85 over that 4,200. If it manages to get over 4,200, then look, last time that happened, it tried to break over 4,200. It didn't, it failed and pulled back. It tried to break over 4,200. It failed, it pulled back. It tried to break over 4,200. It pulled back. Now it's probably going to try again. This is the fourth try. So there are obviously two scenarios. Either it's going to push through or it's going to have another pullback on the downside. What's going to happen? No one knows, but we can plan for it, right? So going into next week, that 41.85, 41.70, 41.85, and 4,200 are the level that I'm watching. 4,200, 41.80 is the level where it has failed before, and saw this huge pullback. But last time when it broke over 4,200, again, failed a couple of more failures here, 43. And if we are looking at 4,200 level, which is about right here, last time when it broke over it, from coming from behind, was right about here, right? Right here. So last time when it happened, it went all the way to 42.50, all the way to 42.50, and then it pulled back, and then it just took off. Now, what I'm trying to say here is that 4,200 is a very critical level. Once it breaks over 4,200, it can run, right? All moving averages on yearly chart are moving up now. 200 days moving up, 100 days moving up, 50 days moving up. As the week goes on, if we see another pull up, the run up, then this will start colliding with this 40-50 level which is already a good support level. And 50 SMA being at the same level as that strong support will provide extra support for it. So if it breaks below 40-50, then I would be very cautious. I will turn bearish and I will start looking for plays on the downside if it breaks below 40-50. First, so again, level on the upside, 41.50. Yes, 41.50, 41.70, 41.85, and 4,200. Those are the level on the upside. On the downside, 4,100, 40.80, and 40.50. Those are the level on the downside that I'm watching for possible entries in SPX. All right. So again, we are still in sideways move, so anything can happen. This will be the upper resistance level that it needs to clear. If it does, it can go to 41.85 next, over that 4,200. So we'll see what happens. Look at Apple. What a strong uptrend. It started back in January. Entire year it has been going up. Look at this 50-day SMA strong, 100-day SMA is up, 200-day SMA is also curling up now. It is near, so the next level to watch on the upside is 176. Break over that, 179.50, break over that, 182.50. So those are the level that I'm watching on the upside. Apple reported nice earnings. Few things to worry about, but it's such a juggernaut. Like it just rolls everything over. Like even with the bad earning, look at how like it did pull back, but then it just keeps on going, right? So with good earnings, there's a higher chance. But this 176 level is where it failed before. So I would be a little wary around that level. If it moves over that, then I'll be comfortable taking 180 calls on the upside. If it breaks over all-time high of 184.5, 182.60, 182.85, then that's all clear sky over that. So we'll see what happens. Apple is one name you never bet against. So I barely trade as it is, but I don't short it. I don't buy puts in Apple. I don't short Apple. It's just fool's errands. Like people, like seasoned investors and successful investors like Charlie Munger or Warren Buffett says that Apple is the name that you own. You don't buy and sell it, you own it. You don't short against it. That's pure stupid. So basically but because Apple is so heavy, it provides a lot of weight in which direction the market will go. So if Apple is going up, then there is a higher chance that the whole tech sector starts to move up. So that's why I pay close attention to Apple. Amazon, on the other hand, look at how far it is from an all-time high of 188. So it has a lot of ground to make up to. It did go to this resistance, downtrending resistance line, as you can see. It did go up to that and failed. It did break below this trend line. So I'm just gonna remove that for now because it's no longer valid. 50 days moving up, 100 days moving up, 200 days still moving lower. This is still a very strong resistance line on the upside. It is sandwiched between 200-day and 50-day. So the next level to watch in Amazon on the upside is first and foremost 107, 106.90, 107. Over that, I will be watching for this 110, and then 10. I would watch for 111, I guess, but it's very close to 110. So we'll see what happens there. I'm not bearish. I'm not bullish on Amazon. It's highly unpredictable, so I don't know what's going to happen. But I do like to trade it, as you guys know. So we'll see what happens there. If it manages to get over this 107 level, then I will definitely turn a little bit bullish on it, because it is over all three SMAs, and that's a bullish sign, right? So that's my plan going with Amazon on the upside. On the downside, I'll be looking for 104. If it breaks below 104, it can go to 130, 103.30. Break below that, the next support is not until 101.20. Google, as you guys, we drew this channel, and as you can see, it's been trading sideways within that channel for a long time, and it has pretty much built its own mini channel here. But as you can see, this 108.20 and then this 109 level has been providing very, very, very strong resistance. It has been failing there a few times. So this is a very strong range. If it manages to get over 109, then it can start to move up towards the top of the range. But right now it's stuck here. break below 102.30, and I will turn bearish in Google because it can move to 100 very quickly, very easily. 200 days moving lower, 50 days moving up, 100 days moving up. So we'll see what happens here. Again, the level to watch on the upside is 109, level to watch on the downside is 103. As long as it stays within this range, we can continue to trade it as we see, as we please. Again, neutral, not bearish, not bullish. We'll see what happens, kind of deal. Tesla, super tight range for past week or so. As you can see, like it's moving, literally moving in about 159 to 165. It's about $6 range for entire week, and then finally on Friday it broke higher. Now it did recapture this 100-day SMA. As long as it stays above 170, then it can start to move towards 178. 50-day SMA is moving lower, 200-day is moving lower, 100-day is moving lower. So overall, it's a little bit bearish. But again, Tesla is super unpredictable. They can come out with one press release and the entire picture can change. So we'll see what happens there. But 170 level is what I'm watching on the upside. On the downside, I'm closely watching 160. So it's a $10 range we can capture for a simple day trade. But those are the big level on a daily chart that you need to keep an eye on. NVIDIA moving sideways. It's been moving sideways since pretty much March. Moved sideways, try to break higher, pulled back. Now it's trying to break higher again. The level to watch on the upside is 290. If it manages to get over that, it's all clear sky, as you can see. No big resistance, at least until almost 315. After that, 300, yes, it's a big resistance, but it can, after that, like 315 can easily come. So 290 is a big level to watch for NVIDIA. So keep an eye on it. If it fills there, then I would start looking at the puts for day trading. Again, like 280 puts can work if it fails at 290 for day trade. Again, quick trades, 15-20%. These are the level that you want to play against because these are the levels that true and tested or big time frame. So just keep an eye on it. Again, level to watch on the downside 280, level to watch on the upside 290. It could continue to trade in this range, but I would love to see it go to 280 and break below that. Again, giving me a little chance again to enter and take some swing trades in it. Meta is struggling since its earnings. It did go up quite a bit and then pull back. If you're trying to play equity in Meta, this is probably the time you want to enter in it, because at worst, if it fails, what it's going to do is going to pull back to this trend line that it has been following for quite some time. I'm actually going to change it. Right, like that. All right. So worst things that can happen, it will do this gap fill to 221. So if you enter here with half position, you will have an option to average down around after this gap fill. One thing you don't do, and this is something I have learned over last 13 years or so, is bet against a name that has reported good earnings. Only stupid people do that. You never bet against earnings winners. It's just stupid. So I'm just watching right now very closely. Probably sometimes next week I will enter in it on the upside. Ideally, if it pulls back to this 224, that would be ideal place for me to enter in it. But we'll see how it goes on Monday. I'm completely okay entering in it around 230 and then averaging down around 220. So we'll see what happens with that. On the option side, it is near the support level. So if it pulls back to 230, that's where I would enter for calls, break below 230 for puts. On the upside, I will turn bullish if it goes over 236.50, then I'll turn bullish in it and start taking calls for the upside, probably 240 or 245 calls. So that's the plan for Meta. Microsoft, another earnings winner. Look at how this beautiful gap. Another name that you don't bet against, another name that you don't and you shouldn't short. So we'll see what happens. The level I'm watching right now on the upside is again the high of the day on Friday, 312. If it breaks over 312, I will confidently enter on the upside calls. Pull back to 303, 304 would actually be an ideal entry point. But we'll see what happens there. Again, bullish on Microsoft. Unless it breaks below 295, then maybe I'll turn bearish in it, because then it can gap fill to 280. But as long as it stays above, let's say 300, I'm bullish in it, right? After below 300, I'll be neutral. Below 285, I will turn bearish in it. But I don't think Microsoft is going to go there. But again, we don't know what's going to happen, so we'll see. 320, and actually Microsoft, as you can see, it's far above all these SMAs, and all the SMAs are curling up, which is a strong bullish sign. Netflix, 200 days curling up, 50 days moving lower, 100 days still is flattening out a little bit. Overall trend at the moment is on the downside. This is the downside. Down is the trend line, downtrending trend line. Support is here near 315. So that's the level I'll be watching for any downside move in Netflix. If it breaks below 315, I'll take 300 puts, because once Netflix starts cracking, it cracks big. If it breaks over 325, I will turn bullish in it, because at that point it has broken out of this downtrend. Plus, it has managed to get over all three SMAs, which is a bullish sign. So I'll turn bullish in it again. 326 level is what I'm watching on the upside, and 315 level is what I'm watching on the downside in Netflix. All right, those were some of the names that I wanted to talk about. If you guys have any questions, or if any other name that you want me to take a look at it, let me know. Post it in the chat right now, and we'll go over it right now. Or I will post a chart for it later on. I'm going to mute myself. Just unmute yourself, ask questions, or put it in the chat. All right, if no questions, we'll go ahead and end this webinar here. Thank you again, everyone, for joining on this fine Sunday. I hope you guys have a great rest of your Sunday, and I will see you in the room tomorrow. Have a great day, everyone.